Hey folks, it's Simon here with your Tao Daily for Thursday the 19th of December 2024. On Tuesday's video, I pointed out the risk that the Wednesday's FOMC meeting and the 25 basis point cut that everyone and their grandma was expecting could turn into a buy the rumour, sell the news kind of event. All right, that's when everybody's expecting a rate cut. Equities have a big push higher into that rate cut. The rate cut comes and people think, right, now we got the cut, now it's time to take profit. Well, there was a little more to it than that today. Yeah, there's undoubtedly an element of buy the rumour, sell the news there. But there were a couple of things that spooked the market more than that. One was Fed Chair Powell in his press conference said that it was a close call this time whether they would cut rates. The market was not expecting that at all. The market thought the rate cut was a no-brainer, an absolute guaranteed shoo-in. So for Powell to say it was a close call was a little bit of a surprise. The other thing that happened was the Fed released their updated summary of economic projections, the SEP, and the summary there is that the SEP shows more growth, more inflation and higher rates than they did in September. All right, so back in September, the equity market was told there'd be 100 basis points worth of cuts in 2025. Now we're being told there's only going to be 50 basis points worth of cuts. Okay, and so stocks had a tantrum. S&P was down 3%, Nasdaq was down 3.6%, the Russell 2000 was down nearly 4.5%. All right, so equities really kind of spat the dummy. All of the major sectors were down. It was a 90% plus down day, so big move down. And what you can see on the S&P here, price went from being above the 80 MA to below the 50 SMA in a day. Well, that is uncommon. This is certainly the worst Fed day we've had in years, and it's the worst kind of single day fall we've had in a couple of years. It was even worse than the August the 5th yen carry trade unwind collapse where we were down 2.9%. All right, so it was a big down day. That's a big red bar that really does stand out. What happens from here is going to be key. Now we are back at the top of the gap from the Trump election win. All right, this was election day. This was the rally. We pulled back to the top of the gap and then obviously rallied to new all-time highs. We're now back at the top of the gap. Right, so this is an area that could act as support. It's an area the market could rebuild from. Right, they always say that it's not actually Fed day that starts the new trend. It's the day after Fed day. Now, I don't expect the market is going to retrace that 3% drop. Anything is possible, but I would really ascribe low odds to that. But are we really going to start, a major stock market crash between now and Christmas? I would ascribe low odds to that as well. Now, markets remain liquidity driven. The market loves a rate cut, you know that. But the market also loves earnings growth. And honestly, with equity valuations where they are, earnings growth is going to be very key in 2025. And if the economy is growing above potential, and the Fed is still going to cut, just by not as much as what they told us in September, that's probably not an awful environment for equities into next year. That's what I got for you. I hope it helps, and I will catch you next time.